Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Good to have you with us here at Ausbiz. Let's first check where we finished on Friday. Global stocks largely lower as investors opted for caution in the lead up to the US election. US Treasury yields and the dollar edging higher. You have a key jobs data out of the States, which was likely to determine the path of interest rate cuts. The benchmark S&P 500 ending slightly lower, closing down some 1% for the week. And the Nasdaq rising on Friday, driven by the mega caps, with many reporting quarterly results this week, including Alphabet, Amazon, Apple, Meta and Microsoft. And Nvidia briefly overtook Apple as the world's most valuable company in Friday's session. Tesla shares, they surged, well, having done so 22% in the previous session, and then built on that again on Friday off the back of the forecast for its sales. Shares of fast food chain McDonald's fell as the company contended with an E. coli outbreak linked to its hamburgers that left at least one person dead. And bank shares fell, led by Goldman Sachs, while regional lender New York Community Bank Corp fell sharply after reporting its fourth straight quarterly loss, primarily due to its commercial real estate loans. And Capri Holdings slumped after a court blocked a pending merger between the fashion holding company and handbag maker Tapestry. That's actually Tapestry there at the bottom, stock rising more than 13%. Well, US consumer sentiment climbed to a 6-month high in October as declining interest rates helped improve buying conditions. Confidence rising among Republican supporters, while it fell among Democrats, reflecting betting odds which showed that Republican Donald Trump is most likely to win the presidency on November 5th, along with a Republican majority in the Senate and House of Reps. The markets are now looking ahead to the next key piece of data, which comes at the end of the week with the US non-farm payrolls jobs. Markets now pricing in a 95% chance of a cut of 25 basis points at the Fed's meeting in November, according to CME's FedWatch tool. Well, the yield on the US 10-year note rose to 4.22%. The 2-year was up to 4.09%, and the US dollar has continued to appreciate. Well, the Aussie has gone in the opposite direction. It's down to 66.1 US cents. And the yen likely to be in focus today, with Japan's ruling coalition losing its parliamentary majority in national elections yesterday, raising uncertainty over the makeup of the next government and the outlook for the world's fourth largest economy. Taking a look at commodities, oil prices settled higher on Friday to be up 4% for the week, with uncertainty over supply hinging on the conflict in the Middle East as well as the US election. Brent crude futures more than 2% higher at $76 a barrel. Copper rose, while iron ore little changed at $104 a tonne. And the gold price recovered from some profit taking to be at $2,747 an ounce. And Bitcoin rising over the weekend to $68,000 US dollars. Well, it's called the pharmacy of the world. The Indian pharmaceutical industry is booming, jumping from $40 billion in 2021 to an expected $130 billion in 2030, with projections it could hit $450 billion by 2047. To talk us through the opportunities there, Mughunthan Siva joining us from India Avenue Investment Management. Mughunthan, it's good to see you.
Likewise, Andy.
There's staggering figures. The growth that you're seeing in the pharmaceutical industry, what's actually driving that?
I guess cost, and scale economics. So when we look at India 10 years ago, the pharmaceutical industry was starting to gain a foothold. But what's happened since is there's been investment into the industry. Lots of medical infrastructure has been set up. So 25% of the FDA approved facilities in the world actually exist in India. So this is building capacity, building investment, economics, scale, is ensuring that India is competitive globally in this industry.
Yeah, I note that it actually accounts for some 40% of generic medicines in the US.
That's right, yeah. So not many people know that, close to half of the generic pharmaceuticals in the US are supplied by India.
So what opportunity does that present? Given that growth, what are you doing there at India Revenue?
Today healthcare pharmaceuticals are about 5% of the MSCI India, so not a big industry. It's dominated, the index is dominated by consumption, financials, banking, plus technology, like every other index in the world. And so we have close to 20% exposure in our fund, which is a big overweight. And that's because we think, firstly, the valuation game has been played, but now you've still got strong growth, which will outstrip the rest of the world in terms of pharma growth.
So any particular pharma companies that you're into now?
We have probably 12 companies at the moment.
Right.
So we're certainly not hedging our bets all on one or two companies. Essentially, we like the companies that are exporting, because this is where the competitive nature of India's sector can kind of drive savings. So if you look at the US, they reported recently that India saved them about 220 million when it comes to drugs, right? So the cheap cost nature, you've got an upcoming patent cliff, which means lots of drugs roll off patent in 25 and 26. And India, with its, economics, can take up a large part of this market share. So that's where the growth's going to come from.
So I mentioned that reliance there, that the trade that's been done with the US, and you take a look at the recent US-India Strategic Partnership Forum, they're talking about building that even further. However, is it also contingent on who wins the White House? And I guess you look more broadly at trade that the US would likely do, particularly under a Trump presidency. How would that affect India, do you think?
Well, I think at the moment one of the issues in the world going forward is going to be inflation and cost. And anyone you can partner with that can reduce your cost is going to be your friend. So I look at the number of deals that are being structured between Indian pharma companies and US pharma, like Eli Lilly, Pfizer. The deals they're doing basically are distribution either way. So Indian companies trying to lower the cost in partnering with some of these global pharma names, and some of the global pharma names remembering that India has a population of 1.4 billion, and their demand for patented drugs is increasing, their demand for over-the-counter drugs is increasing. So there's an opportunity for the US pharma as well to distribute into India.
So you talk about that cost competitiveness, which obviously is the advantage in India. So what sort of investment are we seeing externally into India now then?
Yeah, so we're seeing external investment via really distribution partnerships that are being set up. But I think we're also seeing a substantial two-way, in the sense that India, the government, is improving its regulation. Previously, for example, prior to 2022, over-the-counter drugs weren't permissible. But now that's being opened up. So you're seeing, a market that's being opened up from a local perspective, but you're also seeing a lot of these Indian companies investing more in R&D. India's R&D to sales as an industry used to be 5%, and actually its volumes were high, but value was low. Today, India is about 20% of volume, but only about 5% of value. So what the investment is going into is trying to increase, I suppose, the presence of inventing their own molecule, or taking new drugs to the FDA, which previously was just replicating at a cheaper price.
Mukund, I was also interested to note, in the wake of the BRICS forum we saw last week, what sort of trade are we seeing at the moment between India and China, given that, we saw the two, a rarely leaders meeting between Narendra Modi and Xi Jinping?
Well, I think India's, thought process in the last 5 years has been not to make enemies and put itself into trading partnerships with the rest of the world, particularly given supply chain diversification that's being sought after. That applies to global pharma as well, for an example. If they can make wins, be it with the US or with China, India's trade with China is increasing more and more. They just need to make sure it's a two-way partnership rather than one way.
So, returning to your own fund then, so I gather you've got a 20% weighting on pharma at the moment, so that's significant. How's the rest of the fund structured then? What sort of sectors are you in?
So information technology has been one we've been increasing.
Yep.
Our view is valuations are reasonable at the moment. India's IT firms are still adding capacity. They've been strong additions to the workforce. They're still winning market share. So we think this is an industry where India is continuing to exhibit excellence. It's had 30 years in the making, and today we still think going forward, cost reductions and improving efficiency is important for businesses, and India is well placed to service that, as well as the AI integration that all firms are needing to undertake to improve their efficiency.
And I gather a note for you, so you're launching an ETF.
Yeah, that's right. So towards the end of this year, we'll be launching an ETF of the fund, which means essentially you can buy it through your shareholder account or your broking account using a ASX or a Chicago Board of Exchange code.
Yeah, well, not a bad way to get exposure to the Indian market then. Gunther, terrific to catch up with what you're doing there at India Avenue Investment Management. Thanks so much for joining us.
Thanks, Andrew.
All right, let's check where we're likely to start the week on the local market. You can see pretty much flats there, down just 2 points according to SPI Futures. We're going to get right across all of that when we get going in just a couple of minutes' time.